They made a great economy for us. It's going to make us rich.
What do you plan to accomplish in your first 100 days in office?
We're going to be extending within that period or the Trump tax cuts. That's what led us to one of the greatest economies ever. If you look at just pre-COVID, we had the greatest economy in the history of our country. And I had a lot of tariffs on a lot of different countries, in particular China. We took in hundreds of billions of dollars and we had no inflation. In fact, when I handed it over, they didn't have inflation for a year and a half. And then they created inflation with energy and with spending too much. So I'm a big believer in tariffs. It's going to make us rich. They cost Americans nothing. They made a great economy for us. It's going to make us rich. It's going to make us rich. It's going to make us rich.
Wall Street is gearing up to make billions off Trump's presidency and new policies, but most people have no clue how. And this video has nothing to do with politics, by the way, but rather how we're all dealt a new hand when administrations change and thereby presented with new opportunities and how to play our cards. So I'm going to show you the 2025 playbook. 15 sectors poised to skyrocket while 5 others are set to nosedive. Segment number 1, defense contractors. Trump's focus on national security means billions in military spending. Companies like Lockheed Martin and Raytheon are on the front line of this surge. So missiles, jets, and tech. Defense is money in 2025. Segment number 2, industrial real estate. Tariffs and Made in America incentives are reshaping manufacturing. Industrial real estate giants like Prologis and Stag Industrial are raking in the rewards with booming demand for warehouses and factories. Segment 3, private prisons. A controversial one for sure, but there's sound logic behind this idea. Policies around deportation and detention are fueling growth for Core Civic and GEO Group. Not glamorous, but undeniably profitable. Most people have no idea how to position themselves financially when a new president takes office. With sweeping economic changes on the horizon under Trump, your investments could either take off or plummet, depending on how you react. Segment number 4, oil and gas. Deregulation is opening the floodgates for traditional energy. Titans like ExxonMobil and Chevron, they're going to be cashing in. Drilling, it's back in business. Segment number 5, space exploration. With continued investments in the Space Force, companies like Rocket Lab and Maxar Technologies are shooting for the stars. Literally. You see, the largest spender in the economy, it's not you, it's not me, it's the government. And when policies shift, so does the flow of money. Unfortunately, the average investor is left in the dark, missing out on these major opportunities. Segment number 6, financial institutions. Deregulation also means big banks like JP Morgan and Goldman Sachs can thrive, raking in profits from a less restricted financial landscape. I mean, both companies immediately surged. Goldman jumped 13.2% and JP Morgan 10.6% following Trump's victory with investors anticipating deregulation. Trump's presidency also elevates the potential for increased mergers and acquisitions activity in the banking sector. But not all regulatory changes may be reversed, as some measures implemented after the 2023 bank failures, those might remain in place. Segment 7, opportunity zoned real estate. Because they offer huge incentives for development, and they still make sense due to the program isn't set to sunset until 2047, offering long-term investment potential. Platforms like Realty Mogul, Yield Street, and Diversify Fund are making it easy for retail investors to dive in here. And if you've made it this far, it means you're serious about staying ahead of the curve. And if I'm right, hit the like button, because think about it. Every time the economy changes, the wealthy know exactly where to put their money, and they profit. Wall Street is already gearing up to make billions, while most people stay frozen, unsure of where to even start. I mean, imagine looking back a year from now and realizing that you missed the chance to build some wealth simply because you didn't act. How many times have you experienced that feeling in your life? Or worse yet, failing to understand these changes could leave your investments exposed to risk, while others capitalize on the opportunities that you never saw coming. Like segment number 8, agricultural land. Farming's back in favor. Trade shifts are boosting demand for U.S. produced food. Farmland Partners and John Deere are riding this wave with growth. Segment 9, construction and infrastructure. Big builds are back. Infrastructure projects are fueling companies like Caterpillar and Fluor Corporation. Think roads, pipelines, and progress. Segment 10, railroads and transportation. Because more manufacturing equals more shipping. Railroads like Union Pacific are critical for moving goods across the country. Segment 11, healthcare real estate. You see, with an aging population, healthcare facilities are booming. Medical Properties Trust and Healthcare Realty are key players to watch. Segment 12, tax advantage companies, stock buybacks. Corporate tax cuts means stock buybacks are back in style. Tech giants like Apple and Microsoft will be giving shareholders massive returns. Segment 13, energy infrastructure real estate. Deregulation benefits energy logistics. So think pipelines and storage. Companies like Enbridge and Kinder Morgan, they're going to be leading the way. Segment 14, short-term rentals and hospitality. You see, there's going to be a lot of boom towns, and these boom towns need places to stay. Airbnb and Marriott, they're cashing in on housing for temporary workers and travelers alike. Segment 15, manufacturing companies. Finally, U.S. manufacturing is going to be growing again. Companies like 3M and Whirlpool will reap the rewards of domestic production incentives. And now that we've explored the winners, let's talk about the losers. 5 sectors likely to nosedive under Trump's proposed policies. Struggling sector number 1, renewable energy. Deregulation of oil and gas means renewable energy companies like NextEra Energy and First Solar may lose critical federal support. Without it, their growth could stagnate, or worse. Struggling sector number 2, foreign manufacturers. Tariffs on imports make life difficult for companies like Toyota and Samsung, which rely on low-cost production overseas. With costs rising, their competitiveness takes a hit. Struggling sector number 3, tech companies dependent on global supply chains. Tariffs and trade disruptions can be bad news for tech giants like Intel, whose production costs could skyrocket, squeezing margins and hurting innovation. Struggling sector number 4, emerging markets. America First policies redirect capital and reduce export demand, leaving emerging markets like Brazil and India in the dust. Even ETFs like EEM could face significant pressure. Struggling sector number 5, retail companies dependent on low-cost imports. Retailers like Walmart and Dollar Tree thrive on low-cost imports, but tariffs on Chinese goods force them to choose between raising prices or slashing margins, a lose-lose scenario. So which side of the market are you betting on? Let me know down below in the comments. And don't forget to like, subscribe, and share. And if you're concerned about a housing crash in 2025, I pulled this out for you to watch next. 10 housing crash facts versus fiction. Stay informed, stay ahead, and make your moves before it's too late. Thanks for watching. I'll see you next time. Take care.